Hi everyone, Frank Verney here. Welcome to another edition of Real Estate Help by Frank. Completing a short sale today is much quicker and easier than ever before because Fannie Mae, Freddie Mac, and all the major banks have made key changes to their programs. It actually remains strange that despite all the process improvements and knowing that short sales are an important tool for helping homeowners with hardships to avoid foreclosure and eliminate their mortgage debt, they remain a mystery to many who might actually benefit from them. So what I'd like to do is spend a few minutes and dispel the myths or untruths about short sales and give you the facts that every homeowner should know. Number one, the homeowner would be responsible for the entire amount owed on the mortgage. The truth is that borrowers who complete a short sale in good faith and in compliance with all laws and bank policies will typically not be pursued for the unpaid mortgage balance. However, in very rare occasions, if the borrower has the financial ability, they might be asked to make a one-time payment or sign a promissory note for a portion of that balance. However, this is very rare. Number two, short sales are not possible for an investment property or second home. Absolutely not true. The important factor is whether the borrower meets the program's eligibility requirements, not the status of the property itself. Number three, you must be delinquent on the mortgage to be eligible for a short sale. You do not need to be late. A homeowner who is current must still meet the general eligibility requirements for the program and show upcoming financial distress or one of many other hardship reasons why it's necessary that they sell the home now. Number four, homeowners think they won't qualify because of the service's strict guidelines. Again, not true. Both Fannie, Freddie, and many of the major banks have increased the authority of its servicers to approve short sales for qualifying hardships without any separate and potentially time-consuming reviews. Number five, a short sale will affect the homeowner's future eligibility for a mortgage. If the financial difficulties of not being able to make payments arose from circumstances outside of the borrower's control, such as a job loss, death, divorce, health emergency, they might be eligible for a new mortgage within a minimum of 2 years after the short sale. There's also a new program that was recently announced from FHA that may qualify the homeowner after only 1 year. Number six, short sales can take a long time. While many of the banks and newer guidelines make the timelines shorter than ever, servicers now have 30 days to make a decision once they receive a completed application, and once approved, the sale should take less than 60 days to close. Number seven, having a second mortgage will make a short sale impossible. Not true. If other eligibility requirements are met, a second mortgage is generally not a barrier because Fannie and Freddie can offer up to $6,000 to settle the debt and release the lien. Many of the other banks and programs will also typically offer money to the second mortgage in order to close the sale. Number eight, a short sale will ruin a homeowner's credit. Well, while only the credit reporting agencies can determine how a credit score will be computed, a short sale is far less damaging than a foreclosure. In both cases, typically your score will drop. Short sales will typically drop between 50 and 150 points, depending upon the number of late payments, and shows up as a settled debt, while a foreclosure will drop up to 300 points and appear on your credit history for up to 10 years. Number nine, banks would rather foreclose than bother with a short sale. Well, in fact, foreclosures are very expensive for the lender, and they prefer short sales because they will lose far less money. Number 10, short sale agents must have special training and meet certain requirements for short selling homes. Well, in fact, the Department of Real Estate does not require any specific certifications. However, it's a very complex transaction, so it's important to work with a real estate agent who does have the training and does have the experience so that they can properly negotiate with your lender on your behalf to further speed the process and make the sale happen. So now that I've dispelled these myths and given correct information about short sales, you may be asking when a homeowner should consider doing one. Well, here are 3 good reasons. Number one, they're financially distressed and do not qualify for options such as loan modifications to keep their home. Number two, they have a non-financial hardship that requires them to move now, such as a job transfer, divorce, illness, and many others. Number three, they don't think the home will sell at a price that will cover the outstanding mortgage amount. The first step in the process is to determine who owns your mortgage, and I've put links below this video for Fannie Mae and Freddie Mac to find out if they do. If your loan is not with them, all banks allow short sales, so you can absolutely still do one, and it will follow the information that I've outlined. Now, if you or someone you know could use help in any real estate matter or considering selling or buying, contact me, Frank Verney, and I'd be happy to answer any questions and help in any way I can. If you found this interesting, please like it and share or forward to someone that can use it. I'd also appreciate any comments below or subscribe for further updates. I'll see you again soon. Thanks, and good luck.